I'll start with a question for both panellists. I've got a really tough list of questions here, so we should really test you ladies out. Okay, so setting the scene. FinTechs have transformed how Australians pay, borrow and invest over the past decade, but digital finance, tokenised assets, stablecoins and new settlement models promise to transform the infrastructure beneath these services. From your perspective, what does digital finance unlock that FinTechs couldn't do alone?
You go. Okay. So what I see in digital finance is certainly it improves efficiency, it makes payments faster, it makes them more accessible, it is reducing costs, and it opens up global opportunities for Australians and businesses. I attended the Stripe conference last week. The panels, whether you were listening to policy, you're listening to new products, or you're listening to their growth, and every single panel was around stablecoins. Now, they are a FinTech. They're not talking about it. It's not on their roadmap. It's not their plan. They have well and truly integrated it. Since January 2025, they have seen 30% month-on-month growth by just stablecoins alone. So that's a really good example of a FinTech that have well and truly embraced it. So I'd say there's a lot of upside there, and I think you mentioned the mining boom. I'm not sure if digital finance will be as transformative as that, but I certainly see that it's definitely going to be the next part of the revolution of money, because obviously we've used plastic cards for payments, we've used bits of paper for checks, we've used cash, we're tapping and going, we're buying and selling, and now we're using stablecoins.
Thank you, Paula. Great insight. Kate?
I think if we take a step back and we think about digital finance and what do we mean by digital finance, at the fundamental level, aside from the fact that I represent a crypto exchange, it's the underlying technology that really interests me and fascinates me. And for me, that's where FinTech and digital finance come together, and the extent to which FinTechs can integrate that technology into the core of what they're doing. I was thinking back to when I first joined Westpac in 2016, I think it was, and the very first thing I had to do was leading innovation for the bank. The very first thing I had to do was an inherited conference. I had to lead a blockchain conference. Like, this is 10 years ago, and at the time, Westpac was thinking about what does blockchain mean, what can it do, the efficiency gains, the immutability, etc. So it has taken a long time for this technology to find its place in the mainstream, and I don't think we should underestimate that. And if there are any skeptics in the room, I can understand why. Given that long runway, we might feel skeptical about the underlying technology. But I think, to Paula's point, it's absolutely finding its place, not just in the death spiral of proof of concepts, but in the mainstream. And at OKX, we're seeing, and our job is to provide the infrastructure, to provide the rails in the safest, most secure way possible. And we're seeing mass adoption, not just in Australia, but globally. And stablecoins are a fundamental part of the utility of the technology.
Yeah, it really feels like that question's moved on to is it possible to how? So there's that real move across industry, but also in policy, but probably being led out of other regions. But back to the research. Kate, you described the research as a landmark moment for Australia. I appreciate that OKX sponsored it. So why did you sponsor this research, and what does it mean for Australia?
We sponsored the research because for the last 3 years, I led digital assets at NAB. For those 3 years, I kept coming to conferences and the AFR Crypto Summit, Intersekt here, and I kept hearing politicians saying to me, I get it, I understand the theory, but tell me what it's going to deliver. Tell me, what are the numbers, what's possible? And so when I joined OKX and was given access to some amazing resources, almost the first call I made was to Amy Rose Goody at the Digital Economy Council of Australia, and said, right, we are going to do the most in-depth research we possibly can into the economic benefit of digital finance for Australia. I don't know what that research is going to tell us, but my hypothesis is the number is going to be significant. Who should we engage in order to do this research? And for us, the Digital Finance Cooperative Research Centre was the clear choice, the connection that they're having with government, the alliance they have with the Reserve Bank of Australia, who I know you'll hear from later. And so actually OKX has stepped out of the way, and we've let the Digital Finance CRC really take forward and do the research in the way they want to do it in order to deliver the kind of economic and research rigor that means that the research itself stands on its own 2 feet. So the research has been done in 2 parts. Only tranche 1 has been released, and that was back in June. And the estimate was that digital finance in Australia can unleash $19 billion in productivity per annum. If you compare that to the recent estimate around AI, which was 116 billion in across the course of its life, you start to get a sense of actually this could be as big a transformation as AI is, which is kind of having its moment at the moment. 19 billion per annum is the equivalent of 1% of Australia's GDP in productivity. And there were 2 areas that stood out from that $19 billion figure. First of all, efficiency in markets at 11.4 billion, and secondly, FX. Cross-border payments can deliver 7.2 billion. And I think that's something we'll come to talk about in a minute in terms of practically how does that materialise. The full research will be out at the end of November, and we'll look across the market in a lot deeper level, and it will also look to quantify the impact of regulatory changes on our ability to realise those gains. And so for us, the hypothesis is twofold. First of all, we need regulatory clarity in order to unlock those gains. Secondly, we also need the infrastructure, the rails, in order for that to happen. And that's where the people who are sitting in this room really come to play, the FinTechs that can help contribute to that productivity agenda across digital finance. And it's one of the reasons I was really passionate to come to this conference and talk about the research, because I know the people who can unlock that productivity for Australia are in this room.
Thank you, Kate. That's a really good grounding in what the research is telling us. But why don't we change gears and come to you, Paula, to talk about Project Acacia. Appreciate that Forte Tech is a participant with AUDF. From your perspective, which use cases are most transformative, and how does stablecoins underpin that innovation?
Well, I think so Forte Tech Solutions, there's 24 pilots that Dean has mentioned. We are a leading participant in 3, and we're supporting 2 others. So we're actually involved in 5. But I think the 3 most transformative projects are one is tokenizing government bonds. The reason why that is interesting is because now they can be purchased 24 hours a day, 7 days a week. They are on-chain, so they can be purchased on other platforms other than the ASX or via banks. The settlement piece is different. At Forte, we have created a new wholesale settlement piece, a new DVP, and what that looks like is we have integrated our stablecoin AUDF for that settlement. So that settlement now for tokenised government bonds is now instant. It's no longer T+2. Other great benefits are we can fractionalise it. So a part of Project Acacia is that we have to our focus is only on wholesale investors. But potentially in the future, because we can fractionalise this is something that we could potentially offer down the track to retail. So it's a really interesting one. One of our partners is CoinSpot, and they're next week going to invest $30 million into this pilot alone. And what their main benefit is around self-custody. So they are going to have a yielding product in their hands that they can basically get in settlement whenever they want to do it, and they have full control over that self-custody of that tokenised government bond. So that's one really interesting project. Another interesting project is from a Western Australian company which is called Prospect X. And what they have done is similar to government bonds, they have tokenized mining royalties. And what's interesting is that that provides more accessibility now too. So 70% of mining royalties at the moment can be purchased on the ASX, and it's only by a small amount of large institutions that can do that. What they've done is they've tokenized it, so any wholesale investor now has access to these investments. This is also powered with the settlement piece of AUDF, an Australian stablecoin, which is also really interesting as well. The third case is a little bit completely different. It is with Australian Payments Plus. They have 3 use cases, but one in particular that's really interesting is their interoperability. And what they're doing is they're looking at how does stablecoins like AUDF, that's on an Ethereum blockchain, how does that work with the MPP that's already in place at many banks and payment institutions, and how does other stablecoins and CBDCs all work together. So this is really interesting because this is creating a lot of opportunities of going to market a lot quicker because they can actually solve a lot of problems and challenges. So they're the three main projects that I think will be the most transformative in the pilots.
Thank you, Paul. That was some great insight. Picking on you again, but what's it like to have ASIC, APRA, Treasury and the RBA behind Project Acacia, the 4 significant regulators, and having them involved at this stage?
Look, I am very much a builder and a strategic mind. I am not one that is often talking to regulators or big organisations, but what I've certainly found in this pilot is being completely different to what I had in my mind. And the reason for that is the RBA have had this initiative. They have been really supportive and created a really safe and controlled environment for innovation. They have constant check-ins, which has been fantastic. But the big key I have found actually was with ASIC. So what they have actually provided all lead entities is a blanket relief. And so what that looked like is, so from day one, we didn't have to worry about where does this tokenised government bond, what bucket does it fit into, and what kind of regulation do I need to do, and how do I get lawyers involved and really take away all the time of that project. From day one, we've been able to roll up our sleeves, start testing and start building and innovating. And I think that has been a real game changer for this pilot.
One last one for you for now, Paula. Stablecoins are described as the connective tissue of digital finance. Beyond trading, how do you see them supporting broader economic infrastructure in payments, settlements and market efficiency?
So I'll throw a few stats out there. In last year alone, 90% of stablecoin transactions were simply in trading on and off ramps. So they would be going to places like OKX and they would be depositing US dollar stablecoins and purchasing Bitcoin on their platform. That's an example of what stablecoins were being used for last year. In addition to that, over 27 trillion US dollars was transacted on stablecoins alone just last year. Of that, they were actually 7% more than combined on Visa and MasterCard. So it's really incredible figures, and this is just on and off ramping in trading. So we haven't even touched payments and settlements. So they're the 2 major opportunities that we see. I mentioned Stripe before. They have clients in 150 countries. And of that, since January this year, 100 of those are now using stablecoins for their payments from B2B, which is really interesting. PayPal also 2 weeks ago came out and said that they're focusing on cross-border payments. So cross-border payments, as Kate has already mentioned as well, we've heard all the large numbers and the opportunities there, but I think that is the biggest opportunity here for Australia and how we can embrace that. And the other one is obviously, another thing about cross-border, there was, the UN have actually brought out these sustainable development goals, and one of them is around remittance. And what they're trying to achieve is for migrant remittance, they're trying to get the costs of less than 3%. By simply more people adopting stablecoins, we can achieve that well and truly by the targeted time of 2030. So there's so many opportunities of what we can do with stablecoins, and there's just so much we could possibly talk about. The only other one that I would talk about is wholesale settlement, and so that is obviously the other key piece for stablecoins, and that's with Project Acacia.
I wanted to add one other example, and this is, I don't even know if I'm allowed to talk about this actually, it's hot off the press. But in addition to all of the brilliant productivity use cases Paul has talked about, imagine if you could hold stablecoin and earn yield on it. More yield than you can earn by having savings in your bank account. Australians are massive savers. The amount of money we have in the savings account earning yield is extraordinary. So OKX will be releasing a product. We were meant to release it last week, but it will be in the next couple of weeks using USDG stablecoin where you can earn over 4% yield on that. And what that means is you can hold fiat-backed assets in your digital wallet, earn yield, while you decide what to do with that money. So you can start to see exactly how stablecoins can facilitate but also adapt to provide the services that the core banking services provide and compete very clearly with those services as well.
Okay, a question for both of you. With the research mapping the scale of the opportunity and Project Acacia testing infrastructure, what's the pathway forward for Australia to move from potential to delivery? Kate, can we start with you?
Regulatory clarity is absolutely pivotal, and that will open the doors to significant institutional adoption. We're already seeing it, we're already seeing evidence of it, but we need the regulatory clarity for the NABs, the Westpacs of this world to really engage fully, for the superannuation funds to really engage fully, and then we're tapping into some of the world's largest capital pools.
With the regulators, the significant regulators, ASIC, Treasury, APRA and the RBA involved in Project Acacia, do you see that translating into regulatory clarity? What else is needed? I mean, they've got the research, they're doing the pilots, they're involved. What's missing?
The regulation. So listen, word on the street is an announcement is imminent from Treasury. We'll have to wait and see what's in that announcement, but it will certainly go a long way to, I remember walking through the corridors of NAB and being the only person championing tokenization, and the objection I got constantly was the regulatory fog and the risk associated with that fog, and the fact that actually it wasn't worth taking the risk until the regulation was clear. So it gives conservative stakeholders a good enough reason not to act. And the challenge we have as Australia is we are lagging behind, and we're seeing in other regions huge progress with the Trump administration and all the changes that have happened in the US. APAC led the way before. We're now seeing the US come to the fore, and Australia needs to be part of that global infrastructure and ecosystem in order to be able to compete and benefit from the productivity gains.
Okay, if you had one clear message for FinTech founders and policymakers, what would it be?
Different message for each. I think policymakers, I've probably laboured my point now in terms of clarity is the most important thing, and we need it quickly. For the FinTech founders and team members in the room, which I think we probably have a much greater number of, I think that we shouldn't be siloing any tech. It's absolutely about bringing all the different types of tech together, whether that be AI, whether that be payment systems, whether that be blockchain technology. And I don't think any of us can afford to be purist in the way that we integrate technology into our solutions to deliver better solutions for the end customer. And so I'd urge everyone to have real curiosity about how you can integrate the multiple opportunities together.
Okay, we've just got a couple minutes to go, so I'll start wrapping up. If each of you had a couple of sentences, what excites you most about Australia's digital financial future? Paula?
I think fintechs like Stripe embracing the technology now, it just brings so much innovation in terms of efficiency, cost effectiveness and the global reach that we will have. I think it's really important that Australians start to embrace stablecoins, in particular local ones, because right now everyone is transacting in stablecoins that are US based, and we need to start supporting local currency as well.
Kate?
I think for me, it's that $19 billion number that excites me most. The reality is we have the evidence, we have the infrastructure to realise that economic gain. What we now need to do is execute and execute at scale. And it's why I'm so excited about the projects in Project Acacia, because this is our opportunity not just to test, learn, experiment, but to start to execute at scale. And I still believe Australia can catch up with the global players and actually participate and really benefit from the economic gain of this sector.
And from me and from Bolt's perspective, we're really lucky and fortunate in that we enable other fintechs to have banking-like capabilities, whether that be issuing cards, creating bank accounts for their clients, or having state-of-the-art transaction monitoring and RegTech. So that enables us to help people like Kate, people like Paula, and their business to really flourish in this quickly changing environment. And our focus on tech, we're really a business that is a development business. We just happen to focus our development capability on solving banking and payment problems. And that's really put us in the front seat with really innovative organisations that are at the forefront of changing the way that Australians hold, store and move value. And that means my days basically are filled with having really interesting conversations with really motivated, intelligent people doing really interesting work. And we provide the infrastructure and the capability to do that. So long may it last. But we've got a couple of minutes left, so I just wanted to open it up to the floor and see if there's any questions that anybody might have while we've got these experts up on stage. We've got about 90 seconds, so probably time for one or two questions.
Don't be shy. Oh, here we go.
No, I was waving at Luke.
Oh.
Hi guys. I was just wondering, what's the window of opportunity for Australia? So we're talking about getting more regulatory clarity. What is the window that we have available for us to catch up and kind of get ahead of other geographies?
Really good question. My concern is that the regulation won't be fully enacted until 2027. I really strongly believe that we need to be enacting it next year in its fullest capacity for us to stand any chance in participating in those opportunities. And I think the research, when it's out in its fullest in November, will help to specify and quantify exactly that. But my hypothesis is if we wait till 2027, it'll be too late.
Thank you, Kate. That was a great question. Got time for one more question?
Just at the front there.
Thank you. Yeah, my question is for Paula. Just wondering, does the Force have the plan to expand like Circle into what Circle did into the USDC? The users can access all the decentralized finance solutions?
Sorry, was the question how does USDC swap into Australian stablecoin? Is that the question?
No, because when we're using the USDC, we can access all the decentralized finance protocol. Mm-hmm. So I would like to know whether Australian stablecoins can do the same.
Yes, so there's a couple of Australian local stablecoins, and both are on DeFi and centralised exchanges. We will be getting our own licensing really soon, and you'll be seeing that exposure a lot more. But the way that the Forte AUDF has been set up is exactly like USDC in terms of the complete framework, in terms of compliance and the tech. So it's exactly the same. It's just back to a different fiat currency.
One quick supplementary.
Thank you. Yeah, so there are any opportunities for the decentralized finance builder to build on top of the ecosystem?
Absolutely. So all the stablecoins locally have been built on Ethereum base, so absolutely they're all EVM compliant.
Right, I'm going to say, as they say, we're going to take this offline after that, so you can have a chat with Paula, with Kate and Dean. Please put your hands together and thank them.